Alright boys, this video is going to be on imbalances, also known as fair value gaps, and I will also be touching bases on inverse fair value gaps. So without further ado, let's just get straight into it, since there's a lot to cover here in this video. But for starters, this is what's known as a imbalance, also known as a fair value gap. So I mean, basically what these are, definition wise, you guys don't need to know this, by the way, just to get a gist, right? These are basically just areas in the markets where price just moves so aggressively where we kind of skip these areas, or at least skip buying and selling orders within these areas, and that's how these gaps are created. And the reason why I'm telling you guys this is because actually what the market's job here is either to rebalance into these areas, just as seen here, where we kind of just rebalance into them, or what price usually does is actually come and fill these areas. Pause. But like you guys can see here, we kind of fill this gap. Even here as well, we're filling, which is known as an inverse, in trading knowledge, or sorry, trading language. And that's where the term inverse fair value gap comes from. So also relating to what I previously mentioned about biases, we have obviously bullish and bearish biases, but we also have bullish and bearish fair value gaps. So obviously a green fair value gap is bullish and a red fair value gap is bearish. So I will be talking to you guys about what really each one does, but yeah. So I know these right here are, kind of shitty examples, but I just wanted to show them because they're actually, the earliest ideas I got of a fair value gap. So I just, I shared this to you guys. This is maybe about, a year and a half ago where I kind of found out about fair value gaps. So again, this is just a simple fair value gap, right? A continuation is what we call it, a retracement, where it's when we have a fair value gap like I showed you guys and an imbalance, and we end up rebalancing into the gap, right? Retracing, and then once again coming back higher to target whatever resting liquidity is on the buy side. And just like so, we have an inverse fair value gap. Forget this, honestly, but basically just same idea, right? We have a fair value gap, which actually just comes and gets filled, and actually the correct term is like disrespecting the fair value gap, and in that's where the term inversing comes in, and that's where we get inverse, or yeah, inverse fair value gap right there. So that's really it. No, I'm kidding, but yeah, I mean, these are again very important in the Chicasso model, because I use these same imbalances and fair value gaps on the higher time frame, which I previously mentioned, to determine our biases and set up price targets. And just like so, I also use these on the lower time frames and mid time frames, and in those I use those obviously to enter trades, to take profits, and even to use them as like safety guards for my stop losses. So I practically use these imbalances in almost every time frame, right? So again, these are very important in the strategy, and it's very essential for you guys to truly just grasp a true understanding and how to use these in practically every time frame. So again, just kind of touching bases on what I previously mentioned. Again, we have fair value gaps or imbalances on the daily time frame. Let's see if we can find one just like this. So these are again imbalances right there. And again, on the higher time frame, I'm really just using these for determining my biases and to kind of see where price actually might want to come back into. So these could also be seen as take profits or target points, levels where the market kind of wants to draw towards. So here's one on the 4-hour has seen, and then on the 1-hour, you guys will see there are also imbalances. So again, I told you guys what I use these on the higher time frame, but yet again I also use these on the mid time frames, right, or the lower time frames like the 5 and 15 minute, and these time frames I actually enter trades off of. So as you guys can see, a 5-minute fair value gap like this is where I actually enter trades, whether it's a inverse like this or even let's see if we can find a retracement somewhere here soon. On the 5 minute, okay, right here. So you guys can see we kind of inverse there, not really, but we also use these for retracements or continuations, just like so, where we have a fair value gap on the 5 minute, right, and we enter after we rebalance or we trace back into the gap and get another rejection off of there and continue to where we want to go, just lower in this case. So there it is on the 5 minute, and then again, I even use these on the 3 minute, 2 minute, 1 minute, even the 5 second time frame, which I will show you guys later. And usually in these lower time frames, I'm just using these to like have extra added confluences, and I even have my own fake out models, which kind of really separates the Chicasso model from everyone else, because I mean these fake out models aren't used, I can guarantee you, anywhere else when it comes to fair value gaps. So this is where kind of the lower time frame FVGs or imbalances separate the model itself. And so I will touch obviously basis on that in the examples, but yeah, I don't want to go too far right now. I just want you guys to get like a general understanding of what these imbalances are. So all right, so let's just quickly touch bases on how I use these on the higher time frame. Before we talk about that though, I just want to say that the examples I will be showing, at least live or back test examples, will be through the 5 and 15 minute imbalances, because that's what I mean by imbalances, because that's where I actually enter trades. But I'm just going to touch bases on because I use them in every time frame, like I said. So I'm just going to tell you guys why I use it on the higher time frame and the lower time frame. But yeah, let's just start with the higher time frame first. So again, I told you guys I use these on the higher time frame, like these three right here, basically just to determine my biases, whether it's pre-market. Again, I told you guys, especially higher time frame imbalances, they're much more likely to be drawn into or pulled into by the market. So price will just more naturally just come into these gaps. So I use these for definitely my biases, and I even use them as targets, right? Because obviously if price wants to draw to it, then it's a pretty strong target, right, to target. So let's see if we can find some examples here. This is the 4 hour time frame. Let's see. Okay, so I mean, obviously we have a down. Okay, perfect, right here, right? We can use this one. All right, so what do I mean by this, right? Well, let's say we had a downtrend here, right? Pretty evident we have a bearish trend. So I told you guys before, if I had a bearish higher time frame bias, well, I would only look for shorts, right? So ideally we would take a short somewhere around here, and because I told you guys that these higher time frame gaps are pretty strong levels of liquidity, well, I would probably target something like this right here. So this is a higher time frame gap as seen. This is a gap, right? So let's say we entered a trade right here, right? Obviously we are bearish, so we're only looking for shorts. We enter a short, and well, a target of ours would be something like this gap right here. So that's what I mean by using these in the higher time frame. And this same example could be used for also a bias in general, not just a target, where also within these higher time frame gaps, what you guys will see is that once price taps into these gaps, it's almost certain that price will also reject off of them. Aggressively or not, doesn't matter. They will, I mean, almost certainly reject off these gaps. So in this case, you guys can see, well, you could have a bearish bias, right? And in this case, we would. But, with my strategy, I see this higher time frame gap. It is a non-negotiable for me, and actually, obviously for you guys, since you'll be trading this model, that we don't enter trades while being inside these higher time frame gaps. Just because, again, I mentioned at any point, you guys can see we're rejecting off these gaps. At any point, we're rejecting off these gaps. So if you had a bearish bias and you enter this trade and just don't care about this fair value gap, well, you'd be stopped out because, again, you rejected off the gap. So I practically use these. I mean, these are very important, these higher time frame gaps, and I really just use them for everything, honestly, because, I mean, that's how they work. So that's how I use them in the higher time frame. Again, not, the most detailed explanation, because These are really this video is really more so for the 5 and 15-minute time frame where I'm actually entering trades. Let's just see if we can find some more right here. Um, there we go. So again, here we have another one right here. And if we had a bullish bias, right, just like this, let's say we had a bullish bias, right, and we actually get a stab down lower, right? Okay, when we get a stab down lower, obviously I told you guys within trading days we could change our bias, at least our higher time frame bias. But there are some exceptions, obviously, if we're inside these gaps as so. Like I myself would not take a trade uh, in these gaps. There's no way, right? But if I had a bullish bias, I could use it as a confluence as well, right? So again, I told you guys, we always reject off these gaps. You guys see, well, we rejected off this gap. So again, I have a bullish bias. Oh no, we kind of get a stab lower. I'm not going to change my bias, right? I'm going to stick to it. I'm going to realize, okay, well, we have these gaps. What do? We reject off of them. So I would use this as a confluence and kind of more so uh, just follow my belief that we're going to go higher. I would take a trade within this candle right here after this rejection. And if we find a setup within the 5 and 15 minute, then that's where we take it. So again, you're gonna see this all the time, really, whether it's on the daily, 4, even 1 hour. But yeah, again, like these are just pretty evident in my strategy, very much so in my biases, and again in my targets. So that's really how I use these on the higher time frame. There will be more videos, at least detailed videos on that, just specifically more for the higher time frame. But again, I'm gonna say this again, but this is more so just for the 5 and 15 minute, where I'm showing you guys how I use these in the live markets. All right, boys, here we are back in the field. We're going to be back testing the 5 and 15 minutes. Again, I showed you guys about the higher time frames, right? The lower time frames will be more so, explained in my stop losses and take profits section of the blueprint. And yeah, so I'm just going to be just talking to you guys about the 5 and 15 minute. And although I'm going to be doing that, I'm not really going to be trading the full strategy itself because, again, I'm just trying to get you guys to get an understanding of just using the 5 and 15 minute, right? I don't even want you guys to think about my fake out procedures or my confluences yet. Just want you guys to get an understanding of the simple mid time frame for value gaps imbalances where I enter trades or yeah, where I enter trades basically. But yeah, so let's just get into it. It's 4:10 here, so let's just go to the new market open. There it is. All right, so before anything though, I mean, I'm always going to check my higher time frame biased. As you guys can see, all right, so we've already done this before, right? Daily time frame, looking kind of bearish here. In 4-hour time frame, kind of signaling a bearish sign lower. We actually could even touch in, as I mentioned previously. Well, what do we see here? A higher time frame gap, and we end up rebalancing and coming back down. So this will more so just solidify our bias for shorter. If we want shorter, if we end up going higher, I will not take a trade because, again, what is my bias? Bearish. So I'm really only looking for shorts here. So let's just play these candles out and see what ends up happening. Hopefully we can find a fair value gap here that we create. Let's see. All right, so we actually do end up creating a fair value gap, as you guys can see. This is 11 points, so I don't know why it's so small. Interesting. Let me play this out real quick. All right, actually this is good because I don't just take any fair value gap. Obviously, you guys know there's point metrics to price in the markets as seen like this, and for some reason these are oddly small. You guys can see, although this is a fair value gap, it's only a 14-point fair value gap, which is not very strong. A rule of thumb that I like to go or follow by, at least on the 5 and 15-minute time frames, is I will only take or consider a fair value gap strong enough or appropriate to trade if it's more than 40 points. So if I see a fair value gap like this that's let's say pushing again 14 points. In my case, it's a very weak fair value gap, and regardless of what's going on here, I'm not going to take it, right? So let's actually skip this day because price is looking pretty slow here. Let's just, go back to our higher time frame bias. So you guys can see, once again, we kind of rebalance into this higher time frame gap and we get a huge stab lower. So my bias here is going to be bearish, obviously, until proven otherwise. So let's just see what we end up doing here. Let's play these candles out real quick. Alright, so we do actually end up having this fair value gap. 40 points, so there you guys go. You have a 40-point fair value gap right here. Now again, what is my bias, right? Let's just go again to what's going on here. Alright, well, we have this daily level right here. We also have, let's see. Okay, we honestly only have that in this 4 hour. These are called swing lows. Targets, again, I will touch bases on my take profits and targets on another video. But, oh, actually, this is good too. You guys can see we have a higher time frame 4 hour gap right here, which we also tapped into and instantly rejected. So we actually have a reason for higher here. Although my bias initially was bearish, we ended up taking 2 strong levels, and I told you guys when we do these, we end up reversing, right? So I could have a bias switch of bullish or looking for longs here. Just let's see like this. Hold on, let me just, okay, so actually, yeah, this is fine. This is fine. So yeah, so you guys can see, as soon as we actually end up taking these levels out, we end up rejecting pretty aggressively. So what do we have here? We have a fair value gap, right? This is a bearish fair value gap. And I mentioned to you guys, okay, well, we're looking for longs now, right? You should see some kind of reversal here. So what would I end up looking to target here, or actually even entering, is an inverse off of this. Now, before I even do any of this, I want to reiterate as well, I don't trade like this, and I don't recommend you guys should either. This is blindly trading fair value gaps. One of the flaws that you will see with fair value gaps, whether we're inversing them as seen like this, because this is actually considered an inverse fair value gap, because we'll be obviously like filling the gap up and not, rejecting off of it. But again, what you usually see off of these fair value gaps is with no confluences like the ones I have in my Chicasso model, it's very likely for us to kind of get faked out, where we kind of inverse it, and then you enter the trade with no confirmation, and then you just instantly get, stop loss, just like railed. So I myself, when I first got into trading, I would, I always took to fair value gaps. My mentor, back in the day, taught me fair value gaps and inverse fair value gaps, but he had no confluences. And I found that, a flaw in his trading was, I wouldn't say it was common, but there were times where, there were a lot of times, actually, not even some, there were a lot of times where we would enter these fair value gaps, right, whether it was an inverse, and because of no confluences, we would actually just, enter these things, and we would just get stopped out, right? So that's where I kind of came up with this strategy, right, where I kind of added my own confluences. And I'm kind of getting sidetracked here because I'm not going to talk about the confluence in this video. I just want you guys to get the grasp, again, of these fair value gaps. So, again, I got way sidetracked there. We're looking for longs here. Again, I don't trade like this. I'm just using this as an example of us getting the bias right here, right? So, here we are. I would like to see us inverse this gap. And then again, if we had to target anything, let's see what we can target. You have a 15-minute fair value gap right here. I told you guys I target these fair value gaps in almost every time frame. So let's just go through every time frame and see what we can find. We have another one right there too. Okay, so it's kind of risky. Let's just see what we can find here. Again, I'm going to be telling you guys again, I don't trade like this. I have more stuff added into than just a straight inverse. But I just want you guys to see how this plays out, right? So let's just, enter this trade like it's nothing. Again, there you go. So that was pretty quick. That was not expected to be, whoa, that was very quick. Okay, well, you guys can see it worked out, right? Again, we had a bearish bias, but we ended up taking out the bearish levels of liquidity, and we got a reversal. So therefore, we changed our bias to bullish bias, and that was seen through a higher time frame lens. I showed you guys again; these are higher time frame. Um, hold on. These are higher time frame um, levels again. So again, we reject off these levels, even that fair value gap right here that we rejected off of. And so we had reason to change our bias into bullish, obviously longs here. And well, we took this inverse right here. So this is an imbalance fair value gap. Once it's actually being filled up, then it's considered an inverse fair value gap, just like seen here. And so we entered this trade and we ended up, targeting these other fair value gaps, as you guys can see on the 30-minute and the 15-minute time frame. And just like that, we took a dub. So again, I don't trade like this, at least, blindly off of these fair value gaps, although these are great, you know, ideas. I think that, you need confluences and confirmation to kind of uh, use these ideas the right way. So I'm not going to get into that though. I'm just, again, trading this generally speaking, just so you guys can get the concept and the idea.
All right, boys, let's continue to the next day. Here it's Wednesday, so again, higher time frame. What are we looking at here? Well, in the daily time frame, let's see. Okay, so we do have this pretty strong rejection on Monday, and as you guys can see, we are starting to come back up. So 4 hour, same thing. You guys can see, but we actually ended up coming to rebalance into this higher time frame gap, and as you guys can see, we ended up pushing a bit higher. So based off the daily 4 hour and finally, yeah, the 1 hour, we are seeming to be pretty bullish here. Actually very strong price action towards the upside. So again, what does that mean? I'm going to be taking only longs, taking setups that will only target higher levels of liquidity. And again, the lower levels or shooting for lower is a non-negotiable. You can't do that unless, again, we have reason to do so. But let's just play these candles out and see what ends up happening. So again, really only looking for a long setup here, regardless of what's going on. All right, so you guys can see here we are. We create a imbalance on the 5-minute time frame. We actually do end up inversing this, but honestly, I'm not going to change my bias yet, right? So again, let's play this. Actually, hold on. Let's see. All right, there we go. Actually, that's pretty good. So let's say, again, we're not taking every imbalance here in the Chicasso model, but a lot of people do. And in this case, if you did, well, you guys would have seen if we enter this with a higher time frame bias, at least a bullish one, and we enter a short trade, well, we would have gotten stopped out here. You would have probably targeted something like this, but regardless, you probably would hit your stop loss before that. So the reason for that is because it didn't align with our higher time frame bias. So again, only looking for longs. I actually could still use this fair value gap, although we did inverse it. This isn't a very strong inverse in my opinion, and because my higher time frame bias is bullish, what we could see here is a fair value gap continuation retracement. So what I mean by that is, again, here's our 5-minute imbalance. Obviously, a continuation is a rebalance into this gap, which is what we got right here, and then a rejection off of this gap, which is kind of what we're getting right here, right? So in my opinion, again, I don't trade my imbalance or my continuation models like this. I have more confluences to this, but those confluences will be in later videos. So I'm just going to simply enter this trade as so. Again, just because our higher time frame bias is bullish, right? And we have this fair value gap that we're kind of coming out of again. So we were to have some targets here, right? Let's see what we could find. We do end up having, let's see. I like this right here. It's not horrible. And on the 4-hour time frame, all right, so there's not that much, to really look after here, but this should do it, honestly. So again, not looking for a whole lot here, and this is not how I trade as well. I'm just showing you guys an example of how I use these imbalances, right? So let's just, fill this order in real quick and just see what ends up happening. So again, Reason for this is we have a bullish higher time frame bias, and again, we're rejecting off this gap. So if we enter this trade, I mean, I'm not expecting us to be pretty clean here. All right, actually, let's just make sure we don't get stopped out real quick. Or actually, yeah, it's fine, whatever. I don't care. Let's just play this out, whatever. Okay, so there you go. I don't know why we might stop there. Again, I'm not trading this the way I'm supposed to be doing so, but again, there you guys go. Honestly, pretty solid. Even without the confluences, because the reason for that is because it aligned with our bias, right? So as you guys can see, we were bullish and we ended up being right. So that's another example of actually in this case where we take a trade off a continuation model. The last one was an inverse. This is more of a continuation. Not the cleanest. Ideally, what I'd like to see is this candle not kind of inverse it, but regardless, you know, when we have a pretty strong higher time frame bias, I'm really taking any setup towards, you know, that bias. So that's an example of how I use my continuations in a more general sense. So let's just get into some more examples. Here we are with our next example. I skipped past some weeks just so we don't get bored with the same, past price structure with, you know, higher time frame and whatnot. So again, without further ado, let's just, you know, go back to, again, daily time frame. What are we seeing? Okay, well, all right. So this actually, again, very strongly, you know, you guys can see very strongly we're having a bullish push towards higher. We do have these levels right here that we could target. On the 4-hour time frame, seems to be the same case. As you guys can see, we are actually kind of rejecting off these higher time frame gaps. So daily, 4-hour, and the 1 hour are all bullish. Even this right here, you guys can see just strong pushes higher. So again, I know a lot of these examples are for longs, which is not, I mean, again, not on purpose. It's just how the market's going right now. So hopefully in the future we get some more short setups. But again, you know, it's the exact same thing. You know, what's going on here? It's the same logic applied if we were going down. So again, let's just again shoot for longs, right? No shorts, unless otherwise, you know, the market tells us, you know, something else. But as of now, solely going to be looking for long setups. So let's just play out these candles and see what ends up happening. All right, so we actually do get a fat stab lower. I'm not going to completely change my bias because of this, because again, if we end up looking at the higher time frame, I mean, yeah, you guys can see, okay, well, we do have a red candle now, but overall, I'm still pretty bullish. I'm not gonna let one candle, you know, at least on the lower time frame, determine my higher time frame bias. So again, I'm still gonna be bullish throughout this. We are pushing a bit lower. Okay, so we end up coming back here. So here you guys can see we have a bearish fair value gap. Again, if we were to go back to our higher time frame bias, well, I told you guys we were bullish, and honestly, I'm going to stick to that bias. So again, still looking pretty bullish here. So in this case, I'm going to be looking to inverse this bearish fair value gap, just like the first example. And if we were to have some ideal targets, it would honestly be, let's see. Okay, so I mean, we could target this right here, maybe this right here as well. Again, these are not the strongest targets, but it'll do, considering the fact that, again, we want price to go higher here, right? So let's take advantage of this opportunity right here. Um, yeah, so again, I'm not going to, you know, use my confluences, just straight up take the inverse here. Again, I don't recommend trading like this. I don't trade like this, but I'm just trying to give you guys the gist of what, you know, I like to target here. So again, this is going to be the targets, and let's just see if we end up being right here, right? So let's just play this out real quick and just see what ends up happening. All right, so we get filled right there, as you guys can see, and what ends up happening, okay, we consolidate a bit. Okay, so we kind of take out this level, but again, I'm wanting to see more here. So let's just play these out a bit more, see what ends up happening. There we go. All right, so you guys can see, end up pushing higher once again. Um, Probably could have taken profits there, but it doesn't matter. We ended up taking our last take profit right here. So there you guys go. We were rewarded once again for having the right higher time frame bias. And yeah, I mean, that's another pretty easy trade. Uh, so yeah, let's just get into the next example. All right, so next day, let's just get straight into it. Again, higher time frame. What are we looking at here? All right, bro. All right, so this is going to be probably the last bullish example. I kind of want to show you guys some bearish examples. So, because again, here, I mean, obviously we're looking pretty strong towards the upside. Um, the 4 hour time frame seems to be the exact same, and then the 1 hour. Okay, yeah, so we're gonna be pretty bullish here. Again, only looking for longs unless the market tells us otherwise, but for now it's going to be straight long setups. So let's just play this out. All right, so you guys can see we are pushing higher, but there is no. All right, there we go. All right, so right here, what we end up having here is a green, a bullish fair value gap. So in this case, because we're targeting longs, we will not be entering an inverse here, but rather a continuation. So this will be an example of a continuation. As you guys can see, we have this fair value gap, and because we're targeting longs, some targets we could end up taking is, let's see. All right, so we kind of already took that out, but if this is all-time highs, which it seems to be, right? Yeah, okay, so this is all-time highs. So again, I'm just going to be targeting a bit higher here, um, because we are looking pretty strong, as you guys can see on the higher time frame towards the upside. Honestly, there shouldn't be anything stopping us from going a bit higher here. So let's just play this out and just see what ends up happening. I'm probably only going to target like, I don't know, man. I'm not really trying to target that much, to be honest. Let's just do like 40 points, whatever. Um, all right, so let's just play this out real quick and see what ends up happening. So again, looking for longs, and let's just play this out. So should have filled this in. There we go. So we got filled in. I don't know why the 5 minutes kind of lagging, but let me check now. All right, so for some reason the 5 minute is kind of lagging here. Let me just try to fix that real quick. All right, so we got it to show again finally. As you guys can see, again, bullish. We have this bullish fair value gap that we're rebalancing into, and then once again rejecting off of it. So here we are again. I think I was targeting like what, like 40 points or something. Yeah. Um, Again, this is all-time highs, so there isn't really anything to target. Just kind of probably gonna be trailing my stop loss here. So let's just play this out real quick. There we go. So I'm just gonna trail my stop loss here, because there isn't any real targets going on. Let's see. Yeah, bro. So let's just trail, trail, trail. All right. So we ended up getting taken out there, but at least in profit. And we do actually end up taking even our 40-point target. So didn't really matter, but again, this is actually one of the more cleaner setups we got here. So you guys can see as soon as we tapped into this gap, we instantly rejected back higher. So that was pretty beautiful right there, for a bullish setup. But yeah, let's just get into some, at least I'll try to find some bearish examples. Again, same thing, but I at least want you guys to get a picture of what that looks like. So, all right, guys. So I finally found a bearish example. Um, Dude, that fucking took forever. But anyways, finally here. So before even playing this out again, higher time frame is always essential, is always, number one in terms of what we're looking for. So again, higher time frame bias, daily time frame. In this case, all right. So honestly, here, bro, we actually do look a bit bullish, as you guys can see. We do have this unfilled gap, but again, I'm not counting on us to go down there yet. At least, it's not, this can't be my only like evidence of, us wanting to go lower. So 4 hour time frame, let's see what's going on here. The reason why we could be bearish here is, again, we are inside this higher time frame 4 hour gap imbalance. And as I told you guys before, typically within these gaps, I don't trade these gaps, or at least inside these gaps. If we're going to go higher here, I cannot trade inside this gap. The reason for this is because we almost always certainly reject off these gaps, whether it's the start of the gap, the midpoint, or the fill of the gap. So because of that, I am kind of expecting a rejection off this gap, and once again into lower. So that is my reasoning for a bearish bias on the 4-hour time frame, is because we're inside this gap, and again off these gaps we reject off of them. So that is my 4-hour bias. My 1-hour, again, you guys can see we have these fair value gaps right here, and as you guys can see, we were pretty close to filling this gap. So ideally I would like to see a slight rejection, and even if that, I mean, honestly, we might just get a slight rejection as so, and then, I mean, considering the higher time frame, maybe just a rebalance and then once again a push higher. But hopefully we can catch something towards this rejection, right? So that is going to be my ideal play here. So let's just play this out, get a fat stab down just like we predicted. Um, all right, so we keep on going down. Obviously, no trade yet. We come back up. We do have this bearish fair value gap, but considering this, right, and again, taking into account the higher time frame, now we are looking very bearish, right? So you guys can see, okay, now we are looking to look for shorts. This is some context on the higher time frame, and because of this, I mean, we have the ability now to take shorts. So because of that, I'm not going to be taking this inverse right here. It just wouldn't align with what I'm looking for. All right, so we end up doing that. All right, let's check the 15-minute time frame, see what we end up seeing here. Okay, perfect, actually. All right, so as you guys can see here, we have finally a 15-minute bearish fair value gap. So again, I take 5 and 15 minutes. Typically, when I take trades, it's more rare where I'll take a 15-minute gap because it's just, it doesn't come by as often as a 5-minute gap. But in this case, hopefully and ideally what we can see here is, again, we rebalance into this gap. I'm hoping for a rejection off this gap, and then once again, maybe a bit more of a push lower. Again, the way I'm going to be entering this trade is not how I trade, right? But I'm just going to be showing you guys just how, the higher time frame works within our imbalances here. So again, let's just see what we end up doing here. All right, I'm gonna just enter this trade right here and just YOLO this, bro. Let's see. In terms of targets, what we could seem or look to target here are these sell side levels right there. Honestly, not the biggest targets, but these are targets that probably should get hit. We do have this unfilled gap, which we were talking about earlier, but that is pretty far away, so this isn't really a target for us to depend on. But maybe something like this wouldn't be too bad, right? So again, not looking for a home run trade here, just something to, I guess, identify what we're really looking for here. So again, you guys can see 15-minute bearish fair value gap. We had a reason for us to go lower, so a trade into lower here would make sense for us. And yeah, let's just see how this plays out. So let's just order this up real quick, just like that. All right, so again, looking to target these two, but let's see what ends up happening here. All right, so we're in the trade. You guys can see. Let's just play it out to the 5-minute time frame. Let's just. I'm not trying to get stopped out here. Let's see if we can. Hold on. Whatever. There we go. I'm gonna just let this play out. Perfect. There we go. This was kind of some bullshit. I don't know why with my stop loss, but it's because again, I don't trade like this, so I'm not too sure if we're gonna get stopped out before we hit our targets. But there you guys go. We hit our target pretty easily there. In the 15-minute lens, you guys can see again, came into this gap to rebalance, and we just came right back down once again. So that one was pretty easy, honestly. My battery is about to die, so I'm gonna charge my computer up real quick, and then I'll probably give you guys one or two more, hopefully bearish examples, because we haven't gotten a lot of those in this segment. But yeah, I mean, that was pretty easy. Again, let me just charge this shit up real quick. So, all right, boys, this is probably going to be the last example, at least live example on this segment about the imbalances. But again, let's just get straight into it. So, daily time frame, once again, always checking the higher time frame. You guys can see, okay, well, we actually do look pretty bullish here on the daily time frame. Again, this is all-time highs as well, so that is something to keep in mind. On the 4-hour, again, we're looking pretty bullish here, right? So yeah, this is looking pretty bullish. Let's see what ends up happening. Of course, I mean, we might have already overextended, so we could see a rejection or at least a reversal here, but I'm not gonna take shorts until I actually see the higher time frame make sense of it. So again, let's just play these candles out, see what ends up happening. Kind of just consolidating here, as you guys can see. All right, so you guys can see we actually are pushing a bit lower here, just like so. Okay, so again, I told you guys for bullish higher time frame, market opens up and we end up dumping, right? Now, the only reason where we could change our bias here is if the higher time frame tells us so. So again, let's revisit the higher time frame. Again, what do we see in the daily? Okay, so we ended up taking out this level of liquidity and we kind of rejected a bit lower from there. The 4-hour time frame is telling us the same exact story. So we do have that to work with, right? And on the 1-hour time frame, again, we do have, again, some pretty strong you guys, I guess you can say, just reversal or reversing candles down lower. So in this case, if I were to trade this in the live markets, I would be able to change my bias here to a short bias, a bearish bias. So let's just do that. So again, now I'm going to be changing my bias. Obviously, I made sense of it, so I could do that. And in that case, we will only be looking to trade shorts. So let's just keep playing this out, see what ends up happening. You guys can see, okay, well, we push a lot more lower here. So that's good to see. You get a candle back higher. Hopefully, we get something exactly like this, right? So we end up rebalancing back into this gap. Ideally, what we'd want to see us to come back down, a rejection, back lower. And if we were to find any targets in the higher time frame, let's see what we can find here. So daily is kind of lagging out. Okay, we got there. Okay, so again, not a whole lot of strong targets on the daily time frame, which is fine. Let's just scroll down to the 4-hour. In the 4-hour, we see, okay, again, there's not a whole lot of targets, but let's just see 1-hour time frame. Okay, so you guys can see we do have this gap right here. Something I could do is actually just mark out half or the midpoint of this gap. I told you guys that typically in these higher time frame gaps, what we end up doing is either reject off the initial point of it, the midpoint, or the fill of the gap. So in this case, this would actually even be a valid target. Again, I'm not really looking for a whole lot of what's it called? Like I'm not really trading this the way I'm supposed to. I'm just again trying to show you guys what it's like to uh, use these imbalances. At least in regards to the higher time frame and how those correlate. So I'm not really looking for a whole lot of confirmation here. I'm just going to enter this trade just to give you guys an example of what exactly is going on here, right? So again, stop loss doesn't really matter. I'm just really looking to show you guys that what's going on here is, accurate. So again, let's just enter this trade real quick. Again, reason for the entry of this trade is, well, we had a huge reversal down lower, and after we checked the higher time frames, we had context and it made sense for us to continue lower. So as you guys can see, we had a bearish 5-minute fair value gap, which we ended up rebalancing right back into, also known, or what I like to call a continuation, a fair value FVG continuation model. Again, so we ended up entering off the rejection off this gap, and ideally I wouldn't take a trade until, I'll tell you guys about this later. But again, I'm just showing you guys that this really just works. So let's just play this out, honestly, see what happens. All right, so you guys can see we ended up taking our first price target here. I probably should go break even, but I'm gonna just let this play out. And there you go. So regardless, we would have hit our target, and just like that, it happened again. Honestly, I know this seems pretty easy, and honestly, it really is. Like, I'm not really gonna say it's not. Obviously, there is some added, um, factors when you're trading this in the live markets. And then once again, I'm not really trading like this. Like you guys will see in my next videos that I have a lot more confirmations and confluences and just things that I look for before even entering these trades. So yeah, but at least talking, in a more simpler terms about how to trade these imbalances, whether it's a continuation. Fuck. All right, I accidentally clicked the wrong button. We're just gonna forget about that. basically what I was saying was I'm just showing you guys again. I know I keep repeating myself here, but I just want you guys to uh, get it known that again, I don't trade like this. This is more so just for you guys to grasp the understanding of how to use these 5 and 15-minute imbalances to trade them into higher time frame targets, right? So basically, this is just a correlation between my mid, time frame imbalances, fair value gaps, whether we're taking a trade off a continuation as seen here or an inverse, where I showed you guys in the past examples, and how we usually just use those to kind of align them with our higher time frame bias and just, hit these targets. So again, that's pretty much the gist of this segment. I don't want to get into detail yet, but those will be for the next videos on how I specifically use these and my confluences. And again, that's what really um, makes out the Chicasso model. So yeah, that is the end of the imbalance and fair value gaps, along with the inverse fair value gaps and this section as a whole.